Hello and welcome to our webcast. I'm Amy Pendergrass with Moss Adams and I'm going to get us started for today's session, Provider Relief Fund, Prepare for Period 2 Reporting. Before we begin, I'm going to play a brief video.
Welcome and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only one sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
And now I would like to introduce today's presenters from Moss Adams, Aparna Venkateswaran, Senior Manager, Melaney Scott, Senior Manager, and Georgia Green, Manager from Moss Adams. Their bios and contact information are located in your webcast console if you would like more details. And with that, Aparna, I'm going to turn it over to you.
All right. Thank you, Amy. Hello, everybody. Welcome back if you've joined us last year when we did these webcasts, and welcome to those that may be joining us for the first time. We'll get going, have a full deck of information to share with you, and we'll definitely do our best to answer questions as they come in. But if we do run out of time, then we'll certainly also plan to follow up. So please keep those questions coming as we're going through the materials. All right, so in terms of the agenda, just a quick update here. We're going to do a quick refresher, talk about some updates related to the ARP and Phase 4, talk about some new things we're seeing and nuances we're seeing around Period 2 reporting that is currently open for reporting. And then we'll round it out with some auditing updates that in terms of just what we're seeing and what we're hearing. And specifically for those of you on the for-profit side, there is a little bit more guidance that we can finally share of how those audits might look. So more to come there. As always, everything we're talking about today is based on kind of the information that is available at this point in time. And as we've experienced, it is constantly subject to change. So, definitely keep that in mind as we're going through that. Continued awareness on the deadlines. As I mentioned, the Period 2 reporting is open. So, just kind of keeping eyes on those deadlines in terms of making sure you're staying on track with everything. And as always, like we've said in the past as well, kind of keeping that line of communication open to stay on top of everything, especially with the FAQs as they get updated, and then continue to just document everything and have that trail available so that you've got everything kind of in a clear path. All right, Amy, can you run the first poll for us, please?
All right, so the first polling question is to get a feel for our audience today. It's what entity type do you represent? A, provider clinic, B, hospital, C, tribal health, D, skilled nursing facility or long-term care, E, other healthcare provider, or F, other non-healthcare provider. And we will give you a few minutes to respond. To respond, please click the button next to the answer you choose and hit submit. And if you can't see the submit button, you just need to enlarge the slide area. And I see some responses coming in through the Q&A window. You do need to submit them on the slide in order to get CPE credit. All right, we'll leave it up another 5 seconds or so. All right, here are the results.
Great. Okay. As we've seen in the past, definitely representation kind of from across the healthcare spectrum. All right, Georgia, I want to go ahead and kick us off with the refresher.
Absolutely. Thanks, Aparna. So these are some of the parts of the CARES Act that you may be familiar with. We have the Provider Relief Fund, of course. So there have been 3 phases of the general distribution and various targeted distributions, and we're sort of in the midst of phase 4 general distributions as well, and the ARP, that's the American Rescue Plan rural distribution. We also have HRSA uninsured and underinsured programs, which reimburse you for those patients at Medicare rates, but you do have to submit claims for those payments. Many of you are familiar with the SBA Paycheck Protection Program. There's FEMA disaster assistance that eligible entities can apply for, and employee retention tax credits. These are some of the most common COVID-related sources of funding that are new to us through the CARES Act. Today we're talking, of course, about the Provider Relief Fund, but certainly can help you with some of those other areas as well if you have questions about those. So we'll talk a bit about compliance, but first just want to mention the Phase 4 and ARP Rural distributions, since those are kind of the most recent updates in the realm of the Provider Relief Fund. So the Phase 4 distributions began on December 16th, and they paid out 75% of the applications received a payment then. And very exciting, I just looked on the HRSA website this morning, and they released another press release. They just sent out an additional $2 billion yesterday or today. So check your bank accounts if you were expecting a Phase 4 payment and you didn't receive it on December 16th. You might have received it this morning, possibly yesterday. And their guidance says that these payments will continue into 2022. So now we have 82% of the applicants have received payments under Phase 4, and that was a total of $17 billion that was allocated to Phase 4. The rural distribution was another $8.5 billion under the American Rescue Plan Act. And those payments started to go out on November 23rd. They said they distributed 96% of the applicants' payments. So you want to make sure you know that you've received those funds. Take a look at your bank account for those dates, and that is period 4. So if you did receive those, that'll be period 4 reporting. And I'll hand it off to Melaney to talk to us about some of the special considerations having to do with those distributions.
Perfect. Thanks, Georgia. So hi, everyone. When we're thinking about, we did want to take just a couple minutes and talk through some elements related to, first we'll start with the Phase 4. And as we recall, all of the distributions, whether they were general or targeted, came with their own sets of terms and conditions. Part of by which is we attest to those when accepting the funds, or just by simply keeping those, we're presumed to have agreed to abide by those. And we wanted to highlight here some new elements that are found within the Phase 4 terms and conditions document that of course, previously were not in other terms and conditions documents. So the first one here has to do with a specific bullet point related to mergers or acquisitions. If we recall, previously we did have some FAQs that addressed this component, and now we do have a separate bullet point. So just really want to point out that be aware if you do experience a merger or an acquisition, super important to reach out to the provider support line is the current guidance to report that and obtain additional guidance and information. And within this terms and conditions document, HRSA is stipulating that providers who report, that very last sentence, if a merger acquisition is reported, it increases the risk from their standpoint and so more likely to be audited. So just be aware of that. Historically, when we were chatting with folks and they did have some sort of a transaction, we were recommending just reach out to the provider support line, but please be aware of that specific bullet point. The other component that's new related to this is related to if funds meetings now must be maintained in interest-bearing accounts unless there's an exception that is met. And within that terms and conditions document, there is this reference to the 45 CFR, which is the Code of Federal Regulations. So super important to go out, grab that language. We can help point you to where that would be if needed. But consider that language, see if you meet that exception, and if not, make sure that you do have those funds in an interest-bearing account. As we remember when we go to report, that is one element of the reporting is the interest that might have been earned. So just wanted to point those two elements out. Now thinking about the ARP rule, if you did receive the ARP rule, there is some bullet points contained within that terms and conditions document. The first of which here is that the recipient is going to certify that you did provide services to patients in that designated rural area. And if we remember when we went to apply for the Phase 4, that whole application, there was a little checkbox that we would click that said, yes, please consider us for the ARP rule. And at the time, HRSA had indicated they would take a look, they would determine who met that condition or not to be eligible for those ARP Rural Payments. So now we've got this bullet point that really would encourage, take a look, make sure and you confirm that you do meet those requirement component of it, because that is something that the entity will be attesting to, that they meet that eligibility criteria. The other component of it is this next bullet point related to ARP Rural Payments. And it's interesting language, a little bit different than I think we've seen before, but we have that language about not transferring or allocating the payment to another entity, not associated with the subsidiary or billing 10. So really encourage, take a look at the language in this bullet point in the terms and conditions document. If need be, have always recommended if there's any questions, also potentially involve your legal counsel to validate that this can be met. Really would be important to be mindful of that and where those funds are being used. And we're looking to see, as of this morning, there's not any additional updated guidance in that area from HRSA, but we're watching for that as well. We'll make note that that same merger language is included in this ARP Rural Terms and Conditions document. And finally, we do have this interest-bearing requirement that there is an expanded CFR language that was not in the Phase 4. So really important to take a look at this. I've been watching for HRSA to see if they're going to have some updated guidance about the difference of those two CFR references, but at this point, really important to kind of look at, in the context for this ARP rule, really what both of those sections or through sections in the CFR are referencing to validate maybe you can have that exception if you don't have interest-bearing accounts. But nonetheless, just wanted to call those out and really encourage you to get those terms and conditions documents, really read through them, and make sure that you can meet those criteria components and that you continue to meet them. One other element wanted to bring up and talk about, this is indicative of all of the terms and conditions documents so far, regardless of which funding stream was received. This is around, kind of has been referred to as the Prohibition on Balanced Billing. And again, wanted to call this out, partly because we might start seeing, and I think Aparna is going to touch on it as well, when we talk about the audit requirements. So if there's a single audit that you're subject to, this component is incorporated in there. There's still questions and clarifications around like how that might be looked at and really how is that going to be looked at in that context. But wanted to call out that as we know, these provider relief funds can also be subject to other regulatory bodies. As an example, HRSA is notifying providers or recipients that they've been selected for an audit that is separate and independent from any compliance audit related to the funds. Also, other regulatory bodies can come in. So really important to have this mindful. A lot of folks we talk to, they might indicate they didn't have the situation arise of a COVID presumptive or actual case that was out of network, but it's going to be important to demonstrate that you had processes in place and that did not occur. And then also wanted to highlight a couple of special things to think about related to, I'll just call it the balanced billing consideration. We see language in that terms and conditions document that talks about a presumptive or actual case of COVID. We also see in other references and guidance there is reference to possible. I just wanted to call out that presumptive is not the same thing as possible. We see the possible language in the post-payment notice of reporting requirements document, as well as in some FAQs. And so I like to think about it as presumptive has to do with the coding and billing side, and the possible has to do with quantifying those allowable expenses and expenditures for reporting purposes. And just a couple things thinking about from that standpoint of being able to demonstrate compliance with this area would be, was there potentially updated policies or procedures or guideline documents, as well as monitoring around kind of this piece of it. And also just give a little plug that in some ways, if we think about the No Surprises Act, we won't talk about that today, but there's some very specific components also that can and cannot be billed under the NSA. So kind of that same theory, and some of those theories could apply to both situations. Okay, this particular element we've got here is actually a resource document that HRSA has posted on their website. It's this reporting non-compliance fact sheet, and really wanted to drive home that point that HRSA is letting folks know non-compliance with any of those terms and conditions is grounds for potential repayment of some or all of what you have received. And then they've got this other blurb within the document, because we're dealing with healthcare funds and depending on the nature of non-compliance, there could be potential implications around False Claims Act and other pieces. So really, depending on a situation, it is possible that there could be potential criminal, civil, or administrative penalties that come out of this. So just can't stress enough that it's really important and encouraged to keep those terms and conditions documents handy, revisit them, and really keep them top of mind. Just thinking about, touched on it a little bit, but some strategies around this balanced billing potential is, think of a process now, if you haven't yet, that can help avoid that balanced billing and document that process through job aids and guidelines and whatever would work for your entity, but to have that documented. Data analytics definitely could be a very good realm for a monitoring aspect to possibly identify if it did occur in the past and steps to remediate that, as well as what can be set up for monitoring elements to detect any potential future balanced billing instances. All right, Amy, it looks like we have another polling question.
All right, so our second polling question, how do you feel about the period 2 PRF reporting process? A, very comfortable. B, we're working on it. C, we're not feeling comfortable yet. Or D, not applicable. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions that we pull up throughout the webcast.
Hey, Melanie, while everybody's answering the poll, I thought I'd jump in real quick and see if we could answer. There's a few questions that have come in just around the mergers and acquisition piece that you went over. If you could just maybe run through that again real briefly on what we should be, what people should be looking out for.
Oh, absolutely. So, and I think it would be a combination of things. So when we were talking with folks, if they did have a merger or an acquisition, and I'm just going to kind of generally refer to it as like a transaction that occurs, there is some resource materials HRSA has put forth that can be used as a reference. Oftentimes, I think there was still additional questions. And in those cases, sometimes suggested getting legal counsel involved to really make sure what sort of a situation happened. Also, the direction by HRSA is to contact the provider support line. And I know sometimes that's been a little bit of a challenge, really, I think, feeling like there's getting good resolution to those pieces. But really the recommendation would be, if you had that occur, super important to reach out to the provider support line and get the ticket number and those pieces and information as far as guidance that they have suggested to do or not to do. And then, of course, oftentimes as we go to report, there's some of those questions that come up as well. And it's in a lot of cases more of an individualistic situation. So just good to talk about those as they might be coming up for you around those areas. But just, I would say from that perspective, if you have some responsibility around provider relief reporting, have that communication channel internally that can help bring forth that information and kind of gather as much information as possible to be able to convey that to HRSA via the provider support line. Oh, good. It looks like we have the results available from the poll. And so this is great feedback. And much like we've had before, folks are kind of on those varying kind of spectrum of comfortableness with the reporting. So hopefully for the next component that we have, we can get some of those questions answered and help you feel comfortable, as well as resources to facilitate as well. All right, Georgia, I think we'll turn it back over to you to talk some more about period 2 reporting specifically.
Thank you, Melanie. So for those of you on the line who did period 1 reporting, you'll probably remember that it was originally due September 30th, but was extended 60 days to November 30th. So that was kind of a one-time extension. I wouldn't rely on that for period 2 reporting. If you did not complete the reporting by the deadline, or you had excess or unutilized funds after you do the reporting, then you have 30 days to return that excess amount. You don't have to return the entire award, just the portion that you didn't use. It is pretty serious. If you didn't report, that'll affect future distributions, and they've said that folks who didn't report for period 1 that were supposed to didn't get and won't get a phase 4 payment. So you want to make sure you're keeping up on all of the reporting that you're obligated to do. A lot of times clients ask me about, should we get some sort of approval or notice from HRSA that says, that they accepted what we submitted, and that's not something that they have been doing. So you may get that confirmation email right when you submit, but you shouldn't expect any further follow-up from HRSA. It's really kind of a no news is good news thing. So don't be worried if you haven't heard back from them. I'll also mention too, there was this period of December 13th through December 20th that they did reopen the portal for those who were reporting in period 1 to just have a little extra time to make corrections to their submission. So, you know, we weren't expecting that, but that was an interesting surprise when that happened. So we'll see if that happens again.
And Georgia, real quick, if we might, thinking about returning funds, we did have some folks who were attempting for one reason or another, not necessarily because they didn't report by the deadline, but the entity had determined to return some funds. And there was previously, if more than $1 million was trying to be returned, there appeared to be some difficulties encountered with returning those funds. And so one of the workarounds that was suggested by the provider support line was to break up the return into chunks of, you know, right at that $1 million or less to be able to facilitate the return. And then one other aspect, just as a reminder, is for the interest component of it, because that would need to be returned as well for any of those funds that were held in an interest-bearing account. There is a completely separate return process for those interest pieces. So just a couple of things to keep in mind if you do find yourself, for one reason or another, looking to return some of those funds.
Thanks so much, Melaney. That's good intel. So really, so much of this PRF reporting hinges on this date table. So I really encourage you to become familiar with these periods that they've laid out for us. And of course, there'll be future periods as well, but this was what they initially laid out. So period 1 reporting is done. Period 2 reporting, that is what we're currently working on. And this is for providers who received $10,000 or more in aggregate PRF funds between July 1st, 2020 and December 31st, 2020. And your deadline to use these funds is December 31st, 2021. And a question we often get is, you know, can we go back before the payment and use the funds? And yes, the date of the payment does not, you know, impact when you can use the payment. So when you report expenses and lost revenue in the portal, you'll be reporting all the way back to January 1st, 2020. So this reporting that you're doing in the portal is for the full 2-year time period of 2020 and 2021. The portal is currently open, and it will be open until March 31st, 2022, coming up, and that's at midnight Eastern time. So don't push it till the last minute. I definitely recommend getting in there and getting familiar, getting started, you know, before March 30th. So there are.
Hey, Georgia?
Yeah.
Sorry, I just wondered, there's maybe one other caveat for that prior screen, thinking about folks in their period 2 reporting and the fact that, yes, for period 2, you can go all the way back to January 1st. Really important for folks who had reported during period 1 is going to be making sure that that a dollar reported in period 2 was not reported in period 1. So there is that opportunity, but really got to make sure in the background that you can support that wasn't that proverbial double dipping even within the provider relief fund as well.
Thanks, Melaney. So we've got some special considerations here. If you received the rural health clinic testing distribution of $49,000 in, I believe it was May of 2020, that has its own special reporting portal. So make sure that you are doing that monthly reporting requirement in that portal. And also just interesting to note, there is a closeout process that's due on January 31st, so that's really coming up. If you are a rural health clinic, you want to, and you received that 49,000 and change distribution, you're going to want to complete that closeout process. And it's really straightforward. When you go in the portal, you're really just clicking a button for, you know, did you fully use the funds, partially use them, not use them, and need to return them, signing your name, and you know, it's that simple. Also, we mentioned before the uninsured program and the underinsured program. That's these 2 bullets here. And those are the programs where you can request funding. It's more of a claims-based funding request for COVID testing and treatment for patients that are not fully covered by insurance. and get paid at Medicare rates. So that's not included in this PRF reporting. Those are all kind of separately reported on.
And I think one thing for folks to think about with those three scenarios is they are reported within the portal under the other assistance received component in those line items. The rule will pre-populate, but there is a line item for those other two pieces.
So the reporting portal itself is really well described in the HRSA webinars, and we'll have some links later on in the presentation to give you all the resources there. So that's really not, talking about the actual mechanics page by page of the portal is not really what we're going to get into today. But suffice it to say, there's also this reporting user guide that details, all of these sections of the reporting. And I think it's just, important to know that it's really the same as period 1 reporting, with a little bit added for the nursing home infection control distribution. And we'll talk about, some of the nuances of this reporting. But, it really is just explaining your entity, any, subsidiaries, making sure, validating that you have all of the payments you expect in the portal, reporting on the interest that you've earned on PRF payments if they were held in an interest-bearing account, checking the box to confirm whether you will be required to do the single audit, and Aparna will talk more about that a little later. Reporting other assistance received, and that is, any other COVID-related grants or, any other sources of COVID-related funding that you received. And it's really, that step's a disclosure. It's explaining, I just think of it as a note to self, so that oh yeah, we got this PPP loan that covers our payroll for these months. So we're not going to report any of that payroll on the next step when we report expenses for PRF. So it's really just to help you recall what other funding you got and not duplicate in expenses. It's reporting expenses in various subcategories. There's a step about unreimbursed expenses, and this is not really used for any calculations in the portal, but this is where you can report excess expenses that you've had that you're not applying right now to this particular award. But it also is totally acceptable to put zeros across the board on that step. And then there's the lost revenue step where you have three options, the option 1, 2, and 3, which is actual versus actual, using 2019 as a baseline, budget versus actual. If you have a budget for this entire 2-year period in place by March 27th, 2020. So actually very, very few of our clients have been able to use that option 2, budget versus actual, and instead use option 3, which is the any reasonable method way of doing it. So you can still do a budget versus actual analysis, but you'll really be under bucket 3. For the most part, that's what we see. And then the personnel, patient, and facility metrics, sometimes folks overlook this and then get a little surprised at the end because it is a bit cumbersome. It's a lot of quarters of data going back to 2019 and reporting on the numbers of personnel you had, and numbers of encounters, and number of beds you have if you do have beds. So I would say don't overlook that. Make sure you start early on that one as well. And the survey at the end should be related to this reporting and this period only. So it's the same survey as the first period. It's a 9-question survey, but just keep in mind your responses on this reporting only relate to period 2. It's not cumulative of period 1 and period 2. So the portal will auto-populate the previously entered data in certain fields. It will not auto-populate expenses, but the lost revenue information that you put in there, the other assistance, the information about the entities, parents and subsidiaries, that should all be in there from before. You can update your contact information in the portal if you need to. And as Melaney mentioned before, it's really your responsibility to prevent duplication of reported expenses. So you're only reporting on the dollars you received in period 2, and how you're using those dollars. So you can use them back to January 1st. You don't only have to use them in Q3 and Q4, but you don't want to enter any expenses that you have entered before in period 1, or are duplicate with any other grants or funding program. You also can change your methodology for calculating the lost revenue on this round. So if you previously did it one way and you want to change how you do it, you can, but you have to come up with the entire calculation. You have to use that new methodology for the entire period that you're reporting on now. So you can't just look at certain quarters one way and other quarters another way. So just important to keep that in mind. Also, you can keep your methodology and make changes to the data on the lost revenue section if you had corresponding changes in your patient care revenue. But if you do that, you'll have to submit a narrative justification for why you're making that change. Since it is kind of historical information, they're going to want to understand why you would need to change that. So probably the simplest thing is to, if things haven't changed, leaving that data that you may have submitted previously and simply adding 2 more quarters, Q3 and Q4 of 2021, onto that. And the portal will retain excess lost revenue that you may have previously reported, and that will be factored into the total calculation that's happening now in period 2. So that is something that, I get asked a lot is, oh, well, we had all this excess lost revenue we previously reported. Is it gone? Did we, lose it? And the answer is no, it carries forward into this period in the portal. So there'll be kind of a summary page that shows that calculation. A new thing for period 2 reporting is the nursing home infection control distribution. And just keep in mind, if you are a nursing home and you received these starting on August 27th, 2020, these can only be used for these particular special purposes that are outlined in the terms and conditions. And it really has to do with infection control. And it does say, the language in the terms and conditions does say hiring staff. Although there is an FAQ that clarifies it's hiring or retaining. It doesn't have to be a new hire. It's really just sort of allocating certain staff to providing infection control services. Well, it says, or patient care or administrative support. So I would say these are, the language is there. You're going to want to make sure that your expenses you're choosing for this line up with one of these bullets. And just keep in mind that you cannot use these particular distributions for lost revenue. Also, when you report the interest earned, there's a special page in the portal to report interest earned. It's separate for the NHIC payments versus the other general and targeted distributions. So just calculate that interest separately, and it'll get added to the amount that you received of nursing home infection control. And you'll report on that total amount, including the interest. So we just included in the presentation the links that we think are going to be most useful for you. If you're a first-time reporter, there was a webinar by HRSA on January 12th, and the recording is available and definitely useful if you just need to become familiar with the mechanics of how the portal works. The thing that I would probably, just highlight and scream from the rooftops is take a look at these reporting worksheets. If you click that link, it'll just download the Excel file for you into your downloads folder. Make sure you check there. It's not going to pop it open on the screen like a PDF. But those worksheets mirror what's in the reporting portal and are a really great way to organize the information and collect it all in one place. So here are some resources for first-time reporters. If this isn't your first rodeo, here's some resources for you. Really, kind of mostly the same, except there was a separate webinar by HRSA on January 13th for you all. But always good to monitor the FAQs as frequently as possible, because those do change and they don't send out any kind of email blast about it. But we see new FAQs all the time. So thinking about reporting, here are some of our tips for being successful. Number one, ensure that you have access to the portal. You don't want to wait till the very last day and then find out that, oh yeah, it was this person who left the company 2 months ago that was the login, because there's only one login email address and it uses two-step authentication. So you're going to want to make sure you can get in there. When you get in there, you can check the payments to recipients page. And you can even download that page. There's like a green button to download it as an Excel file, and it will show you the list of payments that you received in period 2, and you're just going to want to double check that everything is there exactly as you would expect. Also, make sure you use that data entry workbook that I just mentioned, the Excel file that mirrors the portal. It's really, really helpful just to make sure that you're collecting all the information that you need. It doesn't include the survey questions, so you can look at the reporting guide to see those 9 survey questions, or you can just, you'll see them when you get on the portal. It's not, rocket science, the survey. You just want to be honest and provide feedback, but it's not like audited or anything. It's just providing feedback to HRSA. Also, the portal requires you to put in a number in every single field, so you'll find that many of the fields you're filling in zeros, so just make sure you do that or you won't be able to advance to the next page. Also worth mentioning, we didn't talk a lot in this webinar about eligible expenses, but just keep in mind that expenses need to be attributable to coronavirus. And that means to prepare for, prevent, or respond to coronavirus. So it really is on you to, retain your records and make sure you have good justification about all of the expenses you submit, that they meet that definition. And if you do need help with that, that's something we work with clients with all the time, and just, helping determine what is eligible and what maybe should be set aside for something else. Let's see, I mentioned this before, but the other assistance receive page is really for information purposes. It's that note to self page, just helping you not duplicate when you report expenses. And so when you do determine your expenses related to coronavirus, then you're going to want to net out that other assistance received insofar as the other assistance received, covered those expenses. You should see the RHC testing distribution pre-populate on that page. Maybe just make a note if you notice that it's missing there. Also reporting period 2, I've mentioned this before, but it includes this nursing home infection control distribution. Those distributions started on August 27th. Other dates are November 2nd, November 30th, December 9th. If you got any of those, that's part of that distribution. And it is different than the SNF distribution, which was on May 22nd, which was reported in period 1. Let's see, we've already talked about how interest earned is reported separately for the general and targeted as one bucket, and the nursing home infection control in its own bucket. And as I mentioned before, don't expect any sort of confirmation or approval from HRSA. It's really, you submit it and no news is good news. Melaney, do you have any suggestions about how to manage reporting risk?
Absolutely. So in addition to some of these things you have here, thinking about keeping track of all of the different funds you may have received across different periods of time, and applying which expenses to which kind of funding stream, that can be incredibly helpful, partly because as far as also considering rollover as well from one period to the next for PRF. The reason being the way the portal the reporting portal is set up, it doesn't provide us that exact amount of how much is rolled over. It will just let us know at the end of the day you have a 0, and a 0 is good. So it's really encouraged to have a subsidiary supplemental tracking document around those things that'll also really facilitate discussion for audit purposes as well. As was mentioned, guidance changes, and there generally is no notice of an updated document being provided in the HRSA website. So really, as we're going through the reporting components, really encourage to not just have your link to go access resources, but download a copy. And I would recommend a copy. If you do capture a screenshot, make sure if there's dates involved on that particular guidance that you capture all of those pieces so you can demonstrate the time period of relying on something. But really download these copies of guidance you're using, thinking about especially if it's predicated on methodologies or other assumptions that you're making when doing your reporting. So kind of that twofold thing. Monitor for updated guidance, keep copies of what you're relying on as you go to do your reporting. Of course, as always, think about those, the standard accounting practices, documentation is really good. I would also say when we go to finish our reporting, when we get to that very last screen, and a lot of us experience this with the period 1 reporting, is there's not necessarily a button that says you can print your submission results. And so really recommend make a copy of that and keep a copy of that. That is really going to be an important aspect to demonstrate what you reported in the portal. I did hear reports back from folks that after they completed their submission and got out and back into the portal that there was an option to print. I don't know if folks that's still available for period 1, but always just a good idea, I think, before you hit the submit button, print that out, save a copy of it as well. Over here on the slide, we have also provided a link to the main HRSA web page that you can then launch into all the different resources and components around the reporting aspect, as well as lots of other stuff surrounding PRF. Okay, Amy, it looks like we have another polling question.
All right, our third polling question, what's your organization's current period 2 reporting status? A, we've entered all of our information in and are waiting to submit. B, we've entered some of the information into the portal. C, we're compiling the information in a tracking document. D, we have not yet registered or started entering information, or E, not applicable. And then also for those of you that would like a copy of today's slides, you can download them from the folder that says slide deck and handouts, and we'll also be sending them via email tomorrow along with a recording of the webcast. And the slide deck does have all of the links. You can just click on them that we've been mentioning throughout the webcast.
Wonderful. And one other little point while we're having folks complete their poll is thinking about the tracking or the worksheets that HRSA has provided for folks. If you reported in period 1 and you take a look at the updated worksheets, or even for information for folks that are new, there is the worksheet does cover information around other assistance received, the nursing infection control expenses, your PRF expenses, kind of those pieces. There are some elements that are not captured within that workbook, and some folks had created some supplemental tabs as well. So just be aware, it does have really the crux and the really kind of high level, a lot of the aspects, but not every single screen is covered in that workbook. So it's important maybe to get a copy of the reporting user guide, because that will walk through all the screens that you're going to expect to see and could be helpful. Great, thank you, Amy. So it looks like, great, folks look like they're kind of getting into that and compiling the information in that tracking document, getting ready to report. And that's wonderful. And I think, like we have experienced, just kind of varying degrees of preparedness for this. I know it's generally also difficult for a lot of folks with the year-end stuff going on for 12/31 year-end. So wonderful. Thank you, everyone. Okay, Aparna, turn it over to you for auditing updates and considerations.
Great, thank you. So last but not least, definitely want to wrap up the webcast with some audit updates. This slide is really just a refresher of what the audit requirements are. So those of you that are in the nonprofit government space, again, the guidance has kept changing, and so kind of the final determination is that the Provider Relief Fund would be considered a CFA expenditure for 6/30/21 fiscal year ends and after. And so what that really means is it's kind of mapping to the spending deadlines that have been associated with the various periods. So for period 1, the spending deadline, as in the due date by which all the PRF money from period 1 had to be spent, was 6/30/21. So any funds that were received and expended during that period 1 would be used on that's what's going to come up on the CFA. For the 12/31 year ends, just as another example, there's 2 period spending deadlines that fall within the calendar year, the June 30/21 and the December 31/21 for period 2. So the total of those 2 periods is what would be considered an amount for the CFA. And of course, the assessment is if those funds meet the threshold of $750,000 or greater in determining the single audit requirement. For the commercial entities, again, this part of the guidance hasn't changed. The same requirements follow in the kind of assessment of whether $750,000 or more of the PRF funds were expended within the fiscal year. Up until this point, the updates we've really had are you could get a single audit similar to the nonprofit or government, or what they're calling a financial related audit of the award or awards under generally accepted government auditing standards. And as I'll cover in a couple of slides, we actually finally have a little bit more guidance on what that first option, the financial related audit, is going to look like. The AICPA has been working very closely with HHS to kind of map out what this audit would look like, what the schedules would look like that would be subject to audit, and what providers, need to be considering when they are getting ready for the audit, and also equally importantly, how the auditors can actually audit these funds. So more to come there. And excuse me. So in terms of, I just went over this a minute ago, but this is just a good visual that in terms of how the CFA preparation should be doing. And a lot of you that have a June 30 year end or a fiscal year end that was between June 30 and December 31, you may already be well along the way in terms of working through the single audit with your auditors, perhaps even with us. And so this may not be new information. But for looking ahead, so at this point we have the guidance really up until fiscal year and that goes through June 29, 22, which talks about that period 1 and period 2 reporting that I referred to a minute ago. For the June 30, 22 year ends and after, the next compliance supplement that will come out in 2022 is going to address how that needs to be considered and what the CFA would need to look like based on that. And just seeing a couple of the questions that are coming through, even though there may have been, there's a little bit of a unique thing with the PRF in terms of multiple fiscal year ends are kind of getting combined into one for purposes of the single audit or the financial related audit under government auditing standards. So you have to kind of look at what spending deadlines were achieved within your fiscal year. So in 2021, so calendar 2021, the example I used, if you reported on period, you have period 1 and period 2 funds, and those 2 deadlines are within that fiscal year, if the total of the 2 equal or exceed $750,000, then you've reported that you've spent that money, or you've demonstrated that you've spent that money based on the expenses and lost revenue, then that is what's going to be subject to single audit or the financial rated audit. And so, but that requirement kicks in for fiscal 21, not going back to fiscal 20 or previous fiscal years. So HRSA and HHS we're working through that, which is why it took a while for us to, get that guidance. So Same with the June 30, 21 year end. So your period one reporting, if you met the threshold for the single audit, even though you may have payments you received back in 2020 and you've got expenses, lost revenue from fiscal 20, your audit requirement kicks in for fiscal 21 and not previous periods as it pertains to the PRF. So this is really the late breaking news. So for the commercial or for-profit entities, as I mentioned, the ICPA's Government Audit Quality Center has been working with HHS, and they are planning to release a practice aid that is going to really help everybody just understand what needs to happen as far as reporting and documentation, and also, you know, from an audit perspective. And the schedule here, the second or the third bullet point on the slide, really this is going to be different from a traditional CFA in that it's meant to be a revenue-based schedule. So whether it's GAAP revenue, if you know you have audited financial statements or financial statements that are prepared on a GAAP basis, the revenue is going to really follow what was captured on the financial statements related to PRF. Or if there are organizations that do like a special purpose framework, meaning a cash basis or income tax basis financial statements, that would be the basis on which the schedule is compiled. There are going to be in the guidance that the AICPA is working on, there will be kind of examples. So there's schedules of how everything should look. There's going to be some footnotes that have to go along with that, and then obviously how us auditors would report on and audit the schedules. The key here, similar to the CFA, is the schedule has to capture all federal grants. So for those of you that may have received reimbursement under the uninsured program, if you got potentially any other like payments like rural payments, et cetera, as a for-profit entity, all of that has to be captured, and all of that will be considered in total to assess the audit requirements, like I just went over a minute ago. And again, it'll follow your fiscal year, and assessing what deadlines to spend money for the various periods were within the fiscal year that we're looking at. And the fiscal year, it's starting June 30, 21 and forward is how that assessment is done. So hopefully more to come on this in the next few weeks, and you know, start to see a little bit more information about what this is going to look like specifically and how we can start to work through these audits finally. Okay, so just another reminder, for those of you that already did period one reporting, this is not new, but for those that may be doing this for the first time during period two, this is a box in the reporting portal. For PRF specifically, so there's kind of a two-part question. One is, was your organization subject to audit? So did you already meet the requirements to have a single audit? And so to the extent you had other grants outside of PRF, you would want to assess that and mark those boxes as applicable for 2019 through 21. But if you didn't have any other funds that were subject to audit or did not meet the threshold for audit, you wouldn't check those boxes for the first section. But for PRF specifically, as I've been saying, since that, in terms of including it on the CFA, that requirement really kicked in under June 30, 21 year ends and after, you wouldn't have PRF be included as a major program or included in the CFA in 2019 and 2020. So you should really only be checking the 21 box. To the extent you may have been in a situation where your PRF funds maybe were inadvertently included in the CFA that was previous to June 30, 21, you definitely want to consult with your auditors. And it may be a moot point at this point, but if you're reporting for the first time now, you know, just something to keep in mind as you're working through the reporting. Okay, so in terms of areas of testing, again, this is not new information for those that have been attending our webcast, but something I just wanted to highlight here, as we're starting to work with clients on the single audit side of things, you know, we're starting to really get into the details of how the eligible expenses have been gathered and compiled and reported on. And, you know, we're definitely seeing a variety of methodologies across the spectrum, you know, from actual invoices that tie to specific invoices to kind of allocations based on, you know, overhead and salaries, et cetera. And so really the key here is they've all got to be ultimately related to prevent, prepare for, and respond to coronavirus. And so keeping that trail of documentation of how these are considered eligible is going to be very important. And so just something, you know, to keep in mind. And then again, the nuance of for the skilled nursing infection control, since that's a new payment that is going to be reported on in period 2 that wasn't present in period 1. There's only specific allowable expenses that are eligible here, so keeping track of those separately as well. All right, there's nothing new in the reporting here, so in the interest of time, just gonna, the information's here for your, you know, your reference later. And so this one, I know Melaney touched on this before, but this is, for those of you that have already had the single audits in section or in process, you know, definitely the clients we're working with, this is an area that we are not able to test because it's the way the guidance is currently worded. It's actually not, it's not at all easy to determine that a provider has complied with this requirement, right? Because, you know, there's no guidance on how that out-of-pocket charge is got to be evaluated, you know, from the provider's perspective or the patient's perspective, and how you're even tracking that and keeping track of that. It's definitely a lot of challenges involved in that. And so, you know, this part of the audit is still on hold from just a, you know, auditor industry perspective, because we're waiting for more guidance from HHS on what exactly they're looking for here, or if this is really still a critical part of compliance with the PRF. So hopefully more to come on that. I know the HHS is working through just kind of further exploring this to determine where, you know, what, if anything, needs to happen to change or be updated. So more to come here, hopefully in the next few weeks as well. All right, Amy, I think we have one last poll here.
Yes, our last polling question is up, and apologies for going over here. We do have a lot of content. So in what area do you feel the least comfortable? And there's multiple choices for you to select from. Go ahead and submit the answer you choose. And once you've met all CPE requirements, your certificate will be available to download in the CPE progress window. All right, in the interest of time, we are going to move on here and do our wrap-up.
All right. Thanks, Amy. So looks like most everybody seems to be well prepared for this. Maybe a close second is the audit preparation. Definitely understandable. All right. So just really quickly, you know, we've been mentioning this throughout the presentation, but I will touch briefly on the last one. So separate really from the audit requirements I just went over, we have learned HRSA has started sending out their kind of own notices to audit the PRF funds. Some of you may have already received one, but if you haven't, there may be one coming at any time. And so really cannot emphasize more strongly, you know, just the importance of, you know, making sure you have like that robust documentation and clear trail of everything in terms of being able to support what you've reported on and are currently reporting on. All right, Amy, back to you.
All right. Thank you, Aparna, Melaney, and Georgia for a very informative presentation today. And thank you to our audience for being engaged and submitting all of your questions to help guide the conversation. We did have well over 100 questions come through, so if we didn't have time to answer yours, we will do our best to follow up with you after the webcast. And also feel free to reach out to our presenters if you have any additional questions. Their contact information is located in your console. And finally, here is a link to an online survey for today's presentation. Please take a moment to complete the survey as your feedback is very important to us. And thank you for joining our webcast. We hope you'll join us again next time. Thanks, everyone.